Hey guys, welcome back to the channel. This is the Road to 1 Million Trading the Options Wheel Strategy. This is episode 3 in the series, recapping this last week on 9/12/2025, which was an eventful week for myself, and hopefully all you watching made money in the market as well. So let's get into it. As usual, what is the wheels strategy? So the wheel option strategy is where I'm starting at the very top of the wheel, selling put options on high quality stocks that I don't mind owning for the long term, selling them at safe deltas using technical analysis to see where I would like to get assigned, um, which will eventually happen with the strategy. Getting assigned on the put and then redoing continuing the wheel, selling calls, collecting premium and weekly income along the way, and just restarting. So excited to get into this week's portfolio update. It was another green week, up $737, and of the realized trades, profiting 625. So far this year, the portfolio is up a little over 11%, almost $28,000, bringing up the account balance to $252,500. And weeks like this, if you refer back to episode 1 of the series, my eventual goal is to live off the premiums received in this strategy. Um, and weeks like this have been very stressful at my 9 to 5 job, and it's always good seeing a green week and realizing that this is a possibility in the future to live off this strategy to cover all my expenses. So even though the account value is showing red because of that Friday, the total week was green, and just getting into some of the trades taken and realized is JP Morgan, $236, Palantir, $185 profited, HIMS, $99, and BBAI, $105, which I'll go into more analysis, in-depth analysis later in this video, but that was this past week, so let's get into it. So some orders that I opened this week, some positions. So I opened up two put contracts on the Russell 2000 ETF, ticker symbol IWM. And the max that I can profit on this is $551. So I sold both for around 275 each. And going into the technical analysis, the chart, the Russell 2000 is the 2000 small cap, so it's not as tech heavy as S&P 500 or QQQ ETFs. I did open it above the 50 RSI, so slightly into oversold territory. But I mean, since the tariff news all through the Liberation Day, April, March, since the tariff lows, the small caps have been on an absolute run. I've been trading this ETF through the lows. I just wish I had more cash down here to deploy, but this ETF has been treating me great. And sure, the premiums might not be as great as an individual ticker, but this just gives you higher diversity. I mean, think about it. If you're selling a put option and you have to get assigned on 100 shares, you have exposure to 2,000 different companies. So if one tanks, your portfolio won't also tank. So less risky, and in finance there is no free lunch, so less risk means there is a little less premium, but it still matches my target of at least a 1% return. I think this is about a 1.2, 1.5% return monthly. So still meeting my trading rules for this account and the challenge. So I opened this on September 9th. So as always, on a red day, the blue line, as you can see, is if the stock price drops to that blue line when the contract expires on October 10th. That is when I will have to buy and purchase 100 shares, or in this case 200 shares, because I opened up 2 put contracts on this stock. But I would happily own the Russell 2000 at 228 minus the premium received, so my cost basis would be 227, around there, 226 per share. So another trade opened is Palantir. This is also one that I've been trading over the past month, which has also been on an absolute tear since hitting a stock all-time high. I've been trading this dip where it's been consolidating and going forward, and it had a nice breakout here where I closed a position and also opened one. So as usual on a red day, as you can see by the green arrow, and I sold or opened or sold synonymous. In case you hear me using either one of those phrases. 150 put contract for $315 max profit at the $150 strike price. So right above the 90-day moving average, well above the 200-day moving average is the green line right here. As you can see, every time that the stock has gone around that 150 level, there's been a strong buying pressure. The candles have gone up, strong ticks up. So it's serving as a nice support zone. So I feel comfortable selling and opening a put position there. RSI is in the 60s, but I think I got in at around the high 50s. So not quite in the oversold territory, but above the median. So keeping an eye on that and looking to close this position at 50% profit like usual if the timing makes sense. This is another one that has had some really nice premiums and I really like the overall growth trend of the stock. It is Spotify, but again, I am a technical trader. So I opened up a put position on Thursday on this nice red day. It touched the 90-day moving average. Strong buying pressure came and tick up, and Friday was a nice little green day. So I think I'm up about 18% already on this position on my max profit of $13.80. I think I'm up about $200, which you'll see later later in the video. But again, RSI right around the 40s, 50s. I feel very comfortable buying at those levels. Very 650 strike price on the put contract below the 90-day SMA, and it's has consolidated in the past around that level, so I feel comfortable that might be a support and has not touched it in a bit. But again, if it does touch it and I do get assigned 100 shares at 650, I'm happy to own the stock and to open covered calls and trade it. I believe in this company long term, and I'm never disappointed or sad when I get assigned. That's a part of the wheel strategy, and that's why you should open only sell puts on companies that you'd like to hold and are comfortable holding for the long term. So going into the realized trades of this past week, you've seen in episode 1 and 2 JP Morgan. This is a stock that I've really liked to trade. It's had pretty decent premiums and has an overall uptrend. Stock has been above the 90-day SMA as well as the 200. RSI has been trading around in between the 50s and 60s. Now it's a little over. So I sold right when RSI hit 60 on this nice little run this week. So less than a week hold and sold at around 60% profit. So JP Morgan's been pretty great. Would I buy now? No. And also I just wanted to say all of this results may vary. This is not financial advice. This is all for entertainment and educational purposes. Don't just copy what I'm doing. Always put your own research and thoughts into the trades. So would I buy now? Personally, no. I'd wait for another dip. RSI come back to the 50s. It come closer to the support level. But when I open the position on this red day, that 290 strike, strong support level, lots of buying pressure around that level, I felt comfortable and closed it at 60% profit. Hims, another one I missed. I do have leaps on Hims and another portfolio that I'm trading, but I did not catch this plus almost 9% day on Friday. I sold on Thursday, but still realized about 55% of the total profit, almost $100 on Hims. Some really positive fundamentals and news, and really believe in the company long term. It has been volatile, but premiums have been good as well. So looking to open up another position on Hims if I do see a pullback, but it just crossed the 90-day SMA. So this was only like a 2-day hold, but in 2 days over 50% profit. That following my trading rules, we take those any day of the week. Now, Palantir, this was about a week and a half hold. Also closed at about 60%. Unlike the 150 strike that I opened up this week, this was a 140 strike that I opened up a previous week, as you saw in the last video. And I realized about 60% profit at 185 dollars. But same fundamentals as I said on the trades opened. So this is a stock that I like. Good run up, hit all-time highs, drawback, believe in the company, strong fundamentals and strong technicals with a long-term chart and overall uptrend. Now, BBAI is Big Bear AI Holdings. It's a more of a meme company. I know I said, oh, you trade stocks that you want to hold in your portfolio, but I think a very small portion of your portfolio, it's okay to trade high premium, kind of more memeier stocks. And this is one of them that I did hold to the full contract expiration. It was about a 30-day hold, a 1-month hold. And I opened it up, as you can see on this green arrow. I sold 10 contracts at 4.5 strike price, about $4,500 in collateral for 105% max profit. So just bringing out my calculator real quick. For 105 divided by 4,500. I mean, that's almost a 2.5% monthly gain. So in my trading rules and my target, it has had some spikes on the AI hype, and even though the stock has for 1 month straight ticked down, mostly red days, every day I would collect data. The contract would decay in value because of the time, and I would collect slowly a few dollars every single day until I hit my max profit at 105. So I think this really shows the wheel strategy and how powerful it is. I mean, a stock can trade sideways, it can trade slightly down, it can trade slightly up over time, and you'll still make money. Because if I just bought the put contract, I mean, I would have lost money even though it was ticking down every single day, just because of the volatility and the theta of holding a 1-month contract. So I really like being an option seller, and I think this goes to show how powerful the strategy can really be. So again, not financial advice. I do not believe in this company long term, but it is fun to trade, and it's okay to risk a very small amount of your portfolio, less than 5%. So, and now just getting into the portfolio update. Some long-term holdings still red. This week we'll have a lot of news on, I believe it's Wednesday, the Fed decision whether to cut rates. So I do want to hold some cash, which is sitting on about $41,000 right now in case the market tanks, to take advantage of it. As you can see, some positions that I did open this last week, IWM, it's already 31% in the profit. If this hits for like around 50-60% in the next couple of days, I will close before the Fed decision. Spotify sitting at 18%. I think I said $200 profit earlier in the video. I'm actually at $250 profit up. Palantir opened up this week already at 36%. And then JEPQ, this is a covered call ETF from JP Morgan, which I bought during the Liberation Day lows. I'm hit just over 10%, and also yields about 11 to 13% dividend yearly, annualized. So I collect it pays monthly, and I collect a monthly dividend from this. So that has been a position that has treated me well, and I might close it before the Fed decision, because I do have. Actually, I won't. I lied, because I do have a covered call on it that I sell, which I know is a little bit controversial, selling a covered call on a covered call ETF. But I mean, you can get that 11-13% yield up to 15-16% by doing monthly covered calls. So I'm September 19th happy to get rid of this. It's not for a large dollar amount, but very happy with over 10% gain, and ready to deploy that money into more puts and to take profits. So again, still open P&L, down mostly because of Nucor dropped about $1,000 this week, but still the portfolio is positive. Goes to show you how powerful a strategy can be. Sprouts, this next week will be an interesting week with a Fed decision, and also a lot of contracts expiring next Friday. I mean, the TLT calls, the Sprouts put, the Waste Management put, the JEPQ call, BBAI, another one, put option, all expiring next Friday. So still around the money on Sprouts and Waste Management. So we'll see if I get assigned. But again, happy to own both those stocks for the long run, and we'll sell covered calls to continue getting weekly and monthly premiums. So I see an opportunity, especially with Waste Management. If I do get assigned at 220, I easily see the stock going to 230, 240. So that's a grand or two profit that I can make in the next month or two if I do get assigned. So keeping a close eye on that. And just on performance, lagging the S&P 500 by about 200 basis points or 2%, but same with the Dow Jones, but crushing the bond indexes and sitting at just right above 11% on the year to date so far. So still have a few months left to go. We'll see where I end off the year and where the market takes me. But that's going to be the end of this video. Thank you all for watching. Slowly improving the content, and just really appreciate everyone liking and commenting and subscribing. So we're sitting at just above 25% of the way there. So slowly ticking up of my goal of $1 million. So I'll see you guys next week for another update. Thank you for tuning in.